Hello, this is Rick Cortez. I am CEO of Broadmark Asset Management, and this is the February 2024 update on the Westwood Broadmark Tactical Growth Strategy. The three fundamental pillars of our strategy continue to lean negative. Valuations are high, whether you measure them in absolute terms or adjusted for inflation. Investor sentiment is increasingly optimistic. In fact, our intermediate model has been in the excessive optimistic zone now for 45 days, which is the 11th longest on record. And history shows us when this measure drops out of the optimistic zone, we should be prepared for a market correction. And I'll keep you up to date on that, particularly on the next video. And finally, monetary policy is at best neutral. The Fed did not cut interest rates in January. They're expected to have several cuts this year, but the economy keeps chugging along, so there could be some disappointment there. The bright spot is momentum. The fourth pillar of our investment process, momentum, continues to be positive, and as a result, we do have a net long 20% position in our separately managed accounts. So what do we see ahead for 2024? We have three major concerns. Number one is the divergence between the major market averages and the rest of the market. So let me give you an example. In January, the S&P 500, the Dow Jones Industrials, and the NASDAQ 100 were all up and made new all-time highs. But the transports, the utilities, and small cap stocks were all down. In fact, the Russell 2000 was down almost 4% in January, and the Russell 2000 remains almost 20% below its all-time high, which was in 2021, a few years ago. We've seen these divergences before, and this is a concern. Number two, investor sentiment continues to show excessive optimism. And we all know when the crowd is doing one thing, we probably should be cautious. And number three, we really don't know when the Fed is going to cut rates. The economy seems to be reasonably strong, and there could be a disappointment if Fed Chair Powell keeps rates higher for longer. Now, that said, we don't predict the market. We adapt to the market. We are risk managers. Our place in your portfolio is to mitigate risk. And at the moment, we have a 20% net long position in separately managed accounts. We will increase our exposure to the market if our momentum models continue to improve. On the other hand, with the three fundamental pillars of our process leaning negative, we see risk in the market and are prepared to act accordingly. So this is Rick Cortez. Thank you very much for joining us. Please join us next month for the next update. Thank you.